Hello everyone, welcome back. This is the final video on the section 5, the final section in Mastering Private Equity. Here we will take a closer look at how private equity is evolving, continues to evolve or has evolved. The industry has matured rapidly since 2017, but it hasn't stood still. From LPs moving into direct deals, to retail investors gaining access to private capital, from the rise of secondaries to the explosion of private debt. We're seeing innovation everywhere. So let's walk through 6 chapters that explore these shifts and what they mean for the future of private capital. Let's start with chapter 21, LPs doing direct investing. So LPs started about a decade ago to get really much more hands-on. Direct investing is no longer just for the big endowments, sovereign wealth funds. Co-investments have almost become table stakes for all active LPs in private markets. Some LPs are passive partners in a GP-led deal. Others are building out full in-house deal teams. Think of Ontario Teachers, GIC, Temasek, or some of the Middle Eastern sovereign wealth funds. It is really a power shift, with LPs wanting a closer access to the deals, a seat at the table, and obviously also lower fees and greater control. Ultimately, more transparency, and many are now credible deal makers in their own right. You can see basically in the visual that the universe of LPs really splits into distinct groups. Some of them very aggressive in direct investing, others less so. Nevertheless, some LPs have also started to walk back from direct investing. Ultimately, it means behaving like a private equity fund, behaving like a GP. And that requires distinct resources and is not necessarily easy. Now, let's go to chapter 22, listed private equity. It's not really a new topic, but it is often a surprise to people that come to private capital. When you hear private equity, you usually think opaque, long-term, institutional. So how does listed private equity, something traded daily on a stock exchange, fit really in there? There are really 2 key ways on how private equity can kind of show up in public markets. Number 1, listed private equity firms, listed GPs. Think KKR, Blackstone, Carlyle, the firms listed part of their management company, giving the public access to their fee income and carried interest. The second one are listed private equity funds. Those are investment vehicles, often trust structures, that deploy capital directly into private companies or in funds. Now, obviously, retail investors get access to those PE-style returns. On the other hand, in the past, we have seen often thin trading volumes, discounts to NAV, the net asset value, and governance complexities. Plus, public markets may undervalue what's inside due to transparency gaps or the perception of lack of transparency and due to market sentiment. Let's jump to chapter 23, risk management. As the asset class matures, risk management obviously becomes more sophisticated for both LPs and for GPs. On the GP side, it's about underwriting rigor, portfolio construction, operational risk. On the LP side, it's about liquidity, access to liquidity, pacing liquidity, vintage diversification, and ultimately scenario planning when it comes to portfolio management. There's also increasing integration of ESG factors and real-time portfolio analytics. So firms like Adams Street, HarborVest are leading the way here, not just tracking performance, but quantifying risk across the fund lifecycle. So again, I just flew in on the slide a few additional risk factors that need to be considered and are actively managed by both LPs and GPs active in private capital markets. Now, chapter 24, private equity secondaries. This has become an incredible structural shift in the last decade. The rise of secondaries from very much a niche activity inside private capital to something that is almost taking center stage. What started really as a niche market in the 90s for LPs selling old fund stakes has really evolved into a sophisticated platform for liquidity solutions for both GPs and LPs alike. We now have not only LP-led deals, we have GP-led deals, continuation funds, tender offers, allowing managers to hold on to high-performing assets and return capital to the existing LPs at the same time. Firms like Linzor Capital, Lexicon, AlpInvest have grown into major players, and secondaries are no longer just reactive. They're becoming part of the playbook for portfolio management for all LPs, from family offices all the way to sovereign wealth funds. Private debt, chapter 25. This is a completely new chapter to the second edition of Mastering Private Equity. Why? Private debt is now a powerhouse in the private markets. If you just scan over the chart that I just flew in, it has exploded, especially direct lending. After the global financial crisis, banks stepped back and PE funds stepped in, providing tailored credit and to mid-sized businesses and overall access to lending. This chapter covers fund structures, underwriting, and the rise of unitranche deals. So direct lending is attractive. It offers steady yields, senior security, and downside protection. But it is not without risk, especially in a higher rate environment. So the direct lending life cycle is really important to understand, and we will dive deeper in that in the chapter. And we will compare sponsored versus non-sponsored deals. And finally, the final chapter in the book talks about long and short, evergreen funds and retail investors. So this is all about the democratization of private equity. With regulators basically globally opening up the gates and private equity firms chasing new capital sources, evergreen funds are booming. Think about the different vehicles from the large buyout funds, all created to open to high net worth individuals and give maybe potentially even retail investors access to an asset class that until recently was really only open to institutional investors. Our secondary chapter discusses what it takes to offer retail-friendly access: liquidity, transparency, robust governance, and communication. It is the biggest expansion of private equity's investor base in history and possibly the next growth frontiers. So, that wraps up section 5 of the book on Mastering Private Equity and of this video series. So private equity continues to evolve. It's not just about buying companies anymore. It's about structuring access, creating solutions, managing risk, and expanding the investor base. Thank you very much for watching. Subscribe below. I will obviously continue to share the most recent trends through my YouTube channel, as it gives me an opportunity to stay engaged with my audience and to share with you what I see in my part, in my location on private equity. Thank you so much, and see you soon.